This week in the markets was one of those weeks that reminded me exactly why discipline matters. There are weeks where the market gives you movement, volatility, opportunity, and clean setups everywhere. And then there are weeks where the market tests your patience, your emotional control, your timing, and your ability to stay disciplined. This week was one of those weeks for me. I had one of my cleanest setups on euro dollar, and by the end of Friday I closed at 1:3 RR. In this video, I'm breaking down the key trade I took on Friday. You'll see what concept I used, why I entered, where I placed stop loss, how I managed the trade, what went right, what went wrong, and what I'm watching next week. If you're serious about becoming a better trader, this is the kind of review process that matters. Because at the end of the day, trading is not just about entries. It's not just about finding a setup. It's not just about making money. It's about consistency. It's about reviewing your performance honestly. It's about understanding your mistakes. It's about recognizing what worked. And it's about improving week after week. A lot of traders only want to post winning trades. A lot of traders only want to show perfect executions. But the truth is, growth happens when you study everything. The wins, the losses, the missed trades, the emotional decisions, the disciplined decisions, all of it matters. And this week gave me lessons in all those areas. So let's get into Friday. Before we break down the trades, here's the full scorecard. This week I took a total of 3 trades. I had 2 wins, 1 loss. My net result for the week was 1:5 RR, and honestly, I'm satisfied with that result because this was not a week where I forced trades every single day. This was a selective week. This was a disciplined week. And one thing I continue to realize as I grow in trading is this: you do not need many trades to have a profitable week. Sometimes one clean setup is enough. Sometimes 2 quality trades can outperform 10 emotional trades. That's something many traders struggle to accept because social media makes it look like trading should be constant action every day. But professional trading is different. Professional trading is waiting. Professional trading is filtering. Professional trading is patience. Professional trading is understanding that not every day deserves your money. Pairs traded this week. Monday there was no trade setup. And honestly, that was completely fine. There was nothing clean enough for me. There was nothing that aligned properly with my model. There was nothing that gave me the confirmation I wanted. So instead of forcing something, I stayed out. And that is discipline. A lot of traders lose money because they feel like they must trade every day. But no setup is also information. Sometimes staying flat is the best position. Tuesday a loss. Now this trade was important because losses are part of the business. You cannot avoid losses in trading. Even with a strong strategy, even with good risk management, even with experience, losses will happen. The key is how you respond to them. Do you revenge trade? Do you become emotional? Do you increase risk? Do you force setups afterward? Or do you remain calm and continue executing your system? For me, the Tuesday loss did not affect my mindset. I accepted it quickly because when I entered the trade, I already accepted the risk. That's a major difference between emotional traders and disciplined traders. Emotional traders become shocked by losses. Disciplined traders understand losses are already part of the probabilities. Wednesday a missed trade. And honestly, missed trades can sometimes feel worse than losses. Because sometimes you see the setup perfectly. You understand the direction. You know exactly what price is doing. But for one reason or another, you miss the execution. Market will always create another opportunity. Thursday a 1:3 RR win, and then Friday a 1:3 RR win also. So by the end of the week, the execution balanced out very well. My best setup type was using the 2:45 AM FVG on Friday. Now, if you've been following my analysis for some time, then you already know that I pay a lot of attention to timing and structure. The reason timing matters is because certain windows in the market consistently create cleaner displacement and better setups. And this particular setup aligned very well with my model. My weakest area this week was waiting to take profit at 10:10 AM on a trade that would normally take 30 to 45 minutes. And this is important because even profitable weeks still reveal weaknesses. You can make money and still identify areas that need improvement. That's what serious traders do. They do not become blinded by profit. They still review execution quality. In this case, I recognized that I held longer than necessary for the type of setup I was trading. Normally, That type of move delivers within 30 to 45 minutes. But this time I extended the holding time. Now it still worked, but the lesson remains important because consistency comes from repeating high-quality behavior. So overall, this week was a good week, and now let me show you exactly what happened on Friday. Friday is where many traders lose discipline. People want one more win before the weekend. People want to recover losses. People want to force setups. People want excitement. And because of that, Fridays can become dangerous, especially during certain times of the session. Volatility changes, liquidity changes, behavior changes, and if you are not disciplined, you can easily give back weekly profits in one emotional trade. This week, I stayed focused on quality only. That was my mindset, not quantity, not overtrading, not chasing, only quality. The pair I watched was euro-dollar. The market presented the 2:45 a.m. FVG and shift in market structure to the north. Now the setup immediately caught my attention because it aligned with the overall directional narrative I already had on euro-dollar. And this is something I want traders to understand clearly. Context matters. A setup becomes stronger when it aligns with higher timeframe direction and overall bias. So, I had said it since first week of April in the membership program that the bias for euro-dollar is 1.2855 long-term. So, my bias was bullish. That bullish bias helped me avoid unnecessary confusion during intraday movement. Because when you understand the larger direction, you stop reacting emotionally to every small pullback. You become more patient. You become more selective. You begin waiting for the market to align with your narrative instead of forcing your own opinion onto the market. So once the market presented the 2:45 a.m. FVG and the market structure shifted to the upside, I became interested in execution. One thing about market structure shifts is that they tell you something important. They tell you momentum is changing. They tell you order flow may be changing. They tell you buyers may be stepping into the market. And when that aligns with the bullish higher timeframe bias, the probability improves. So, I entered at this level, placed my stop below the candle that made the FVG, and aimed for 1 to 3 RR. Now I want to spend some time talking about stop placement because this is where many traders make mistakes. A stop loss should not be random. A stop loss should have logic. A stop loss should represent the point where your trade idea becomes invalid. For me, placing the stop below the candle that created the FVG made sense structurally. Because if price violated that area aggressively, then the setup would no longer look clean to me. That's important. Your stop loss is not there to protect your emotions. It is there to define your risk, and once I placed the trade, my focus shifted into trade management. Trade management is what I want you to pay attention to because if you know what you're doing, you will not think emotionally during execution. Because entering trades is easy, managing trades is harder. Many traders know how to enter, few traders know how to manage. And poor management destroys good setups every single week. During the trade I stayed calm. I was not overreacting to every candle. I was not moving stop loss emotionally. I was not panicking during pullbacks. I understood the setup. I understood the structure. I understood the objective. And because of that, I allowed the trade room to work. Now as a day trader, Fridays require additional awareness. Because you must think about weekend volatility and closing conditions. So I either close before weekend volatility, take quick profits, scratch trade above 1 to 3 RR. As a day trader, these are important considerations. Because preserving capital matters more than forcing extra profit. There are traders who hold unnecessarily into the weekend hoping for more movement. Sometimes it works. Sometimes it gaps against them. For me, protecting consistency matters more. So this trade finished 1 to 3 RR. A clean execution. A disciplined execution. And honestly, those are the trades I enjoy most. Not because of the money, but because of the process. Because when a trade follows your model clearly, it builds confidence in your execution. Now let's talk about the lessons. The lesson is, don't overtrade on Fridays. 1 or 2 clean trade is enough each week. Protect weekly gains by moving your stop. And these lessons sound simple, but simple does not mean easy. Many traders know these things intellectually, but emotionally they still struggle to apply them. Especially after losses, especially after missing trades, especially after seeing volatility. But long-term profitability usually comes from boring consistency. Not excitement, not gambling behavior, not forcing action. One thing I've learned over time is that the market rewards patience much more than aggression. The patient trader waits, the emotional trader reacts. And reaction-based trading usually creates inconsistency. Now going into next week, I'm focused on a few things. Pair 1, Euro-Dollar. I'm watching price going to 1.2855 level, and if price drops to 1.16951 before going north, that will be good. If price reaches that area, I'll look for the same market structure shift. Aside from these setups, I'm working on patience, fewer trades, better entries, holding winners longer, journaling daily, sticking to session times. That's where growth really happens. And honestly, journaling is one of the most underrated parts of trading. Because memory is emotional, but journaling is factual. When you journal properly, you begin noticing patterns. You notice emotional mistakes. You notice timing mistakes. You notice recurring strengths. You notice recurring weaknesses. And over time, that information becomes extremely valuable. Now, another thing I want traders to understand is this: good weeks should not create overconfidence. And bad weeks should not create hopelessness. Both are dangerous emotionally. After a profitable week, some traders suddenly increase risk unnecessarily. After a losing week, some traders begin doubting their entire system. The goal is emotional balance. Professional traders think in probabilities. Not emotions, not ego, not excitement, probabilities. So whether this week was profitable or not, the goal is always the same: get better. One week doesn't define a trader. Consistency does, execution does, discipline does. The traders who improve are the ones who review, learn, adjust, and come back stronger. That's the process I'm committed to, and honestly, that process never ends. Every week reveals something. Every month reveals something. Every market condition teaches something different. The learning never stops. That's why humility matters in trading. Because the market will humble anyone who becomes careless, so my focus remains the same. Stay disciplined, stay patient, protect capital. Execute properly, review honestly, improve continuously. And over time, consistency compounds, not overnight, but gradually. That's the reality of professional trading. If you enjoyed these honest weekly recaps and want me to keep posting every Saturday, hit the like button and subscribe. And if you've been following these breakdowns consistently, then you already know the goal here is not fake perfection. The goal is real trading growth. The goal is transparency. The goal is learning together and improving week after week. Comment below. What was your best trade this week? I read the comments. And I'll see you next Saturday.